Hello, how you doing today? Welcome back to another episode of Litigation Speaks. I'm Richard Claywell again, and I want to talk to you today about what a calculation of value is and how it works in comparison with fair market value and fair value, and why this should not be used in a litigation setting. Different states have different requirements when there's litigation involved if you need to know what the value of a company is. Most of the states use either fair value or fair market value. The primary difference between fair market value and fair value is fair value does not take into consideration the minority discount or the marketability discount. Fair market value does take that into consideration. The standard of value, which would be fair market value, sets forth the criteria that you would use to come up with the work product to determine the value of a company. So that's what we're looking at, is what are my underlying, quote, requirements that I need to follow, the due diligence I need to do in order to make a determination of what fair market value is. The standard of value, fair market value, really addresses the issue of is the value to whom and under what circumstances. When you look at fair market value, we're looking at revenue ruling 5960, and we talked a little bit previously about what fair market value and 5960 really represent. Okay, we've talked previously about revenue ruling 5960, and I would suggest that if you do this kind of work, where the value of business is necessary, or if you haven't done it for a while, that you go back and read 5960 so you're more conversant with what's actually going on and what is expected of somebody like me when we do a business valuation. There are factors that we need to consider for fair market value, and these factors I'm going to talk about are in revenue ruling 5960. We need to determine and look at the history and nature of the company that we're going to be valuing. We need to look at the economic outlook and the industry outlook for the company. We need to look at the book value of the stock and the financial condition of the company, which includes a whole litany of different items that are out there. We need to look at the earnings capacity of a company. We need to look at the dividend paying capacity of the company. Does the company have goodwill or does it not have goodwill? Are there other intangible assets? And do we need to value those various intangible assets? Is there a sale of the stock, and what was the size of the sale of the stock that was out there? And what's the market price of companies in the same or similar industry? Now, these are items that we need to take a look at when we do fair market value. We're going to get to a calculation of value in just a couple of minutes here. Fair market value is a hypothetical buyer and seller, both individuals being aware of all the relevant facts, and there's really no duress. The definition is a little longer, but that's basically what the definition says. A calculation of value, that whole concept came about with developing the standards for doing business valuations for CPAs. Basically what it says is you want to go out and have an agreement with the client. So the client and I are going to agree on what we're going to do. Does that follow revenue ruling 5960? Maybe, maybe not. With the calculation of value, explaining to the client how valuations work, some of these methods will automatically produce a lower or a higher value. So which one do you think the client is going to want to use? So now we've agreed with a calculation of value to do specifically what the client is requesting. They have limited our professional judgment to go out and look at different items that potentially could have an impact on the value of the company. That's what a calculation of value is. When you look at revenue ruling 5960, which is the grandfather, the holy grail of doing business valuations, call it up, get a Word copy of it, and go out and do a word search for the word must, M-U-S-T. These are things that revenue ruling 5960 says you must do it. These items typically are not done in a calculation of value. They are done in a fair market value. So if somebody's done a calculation of value, they haven't done the items that are included in the treatises to explain how we're supposed to do this, they're not including the items that 5960 says must be done, then that has not met the standard of value. So in actuality, a calculation of value does not have a standard of value linked to it. So if I'm using a calculation of value in a litigation setting, the question becomes, Mr. Claywell, what standard of value are you using? And it's not fair market value, and it's not fair value, or any other type of recognized value. It's what the client and I thought we would do to come up with the value of the company. When you do fair market value, there are three approaches. There's an asset, market, and income approach. The asset approach, typically you'll have a going concern, which is adjusted book value or liquidation value. In the market approach, you will have a guideline company comparison approach, which would go out and try to find publicly traded companies that are comparable to our companies, or we try to find private sales transactions and try to get those to be in relationship to the company that we're trying to value. Or we can use an income approach. Typically we'll see a discounted future earnings or a discounted cash flow. The problem is when you do the calculation of value, you're going to look at all these options. You should look at all these options that are out there. You're going to explain all these to the client, and then the client's going to say, well, I want to pick and choose the one that's going to be more beneficial for me. And so that's what is typically done. And so now, again, you've restricted my professional judgment because the client and I have to agree on what we're going to do. So just be cautious of that. When you use the valuation, again, determine what the standard is going to be, and if it's not fair market value, will it stand up in court? And a calculation of value, again, does not have a standard of value. So this is a brief summary of the distinctions between calculation of value and fair market value. If you have any questions on this topic area, if you want to send me an email or give me a call, I'll be more than glad to discuss it with you. And I want to thank you for tuning in today. Don't forget to subscribe and follow me on LinkedIn at Richard Claywell. We'll see you next time. Hope you enjoyed this. Have a good day. Thank you.